do is take a look at some real transactions and how we can organize them using the tool of a worksheet, which will be introduced in this chapter. And in the worksheet, we are going to be organizing the transactions into the form of the accounting equations. So what you see in front of you is a list of transactions, and then below that you can see the actual worksheet, and at the top of the worksheet in the blue header is the accounting equation. So you can see some examples of accounts underneath assets, cash, accounts receivable, supplies, and equipment. And then you see liabilities and owner's equity with their related accounts. So let's just start with transaction A and see how this works. So in transaction A, we have the owner Todd who invests $9,000 of cash into his business. So what will happen here is that our asset account for cash will increase by $9,000. How we accomplished that was a contribution by the owner, Ted Newcomb. So on the other side of the equation, balancing that out is $9,000. Now let's go down to transaction B. Newcomb, the business, purchased $1,000 of supplies on account. What that means is, on account, that there was no cash trading hands yet. We are going to pay them, we are Newcomb, we are going to pay the vendor $1,000 at a later time. So while our supplies increased by $1,000, we accomplished that by incurring a liability called accounts payable. So on the other side of the equation, $1,000. Transaction C, we purchased $6,000 of equipment with cash. This is an interesting transaction because it only affects one side of the equation, but it still balances out. So cash goes down by $6,000, and that's offset within assets by the increase in equipment of $6,000. I'm going to do one more transaction together, transaction D. We earned $10,000 of service revenue on account. Again, account is indicating that no cash is traded hands and that it'll happen in the future. So while we earned the $10,000, we didn't get it yet, but we do record that as an asset called accounts receivable. It is like an IOU. We will get paid later for that $10,000. And then the other side of the equation, how we accomplished that was earning revenue, which increases owner's equity to balance out the equation. What I'd like you to do now is to pause this video and see if you can complete the rest of the video, the rest of the worksheet, filling it in. And I'm going to go ahead and complete it off screen, and then we'll come back together and compare notes. Alright, you can see that I finished up the worksheet and I totaled up each column, and then I tested whether my assets equal my liabilities plus my owner's equity by comparing the total assets of $12,000 that you can see at the bottom of the screen to the total of the liabilities plus owner's equity, which also totaled $12,000. So the worksheet did balance. That's a very important step to do at the end. Now what we can do with this worksheet is prepare financial statements, which would be in the next videos. So what I want you to do is to note the ending balances that you see on this worksheet for cash, $3,000, accounts receivable, $2,000, and so on. And then also look at our revenues and each of the individual expenses. Note those and then see how we use those in the next videos to prepare financial statements.